Hi, this is Greg Remke. This is part two of a presentation on the banking finance monetary policy topic that is titled Investment Powers Growth. And I started this in the first session, which is here on YouTube, from an article in Real Clear Markets on skepticism about federal intervention or monetary stimulus that might follow the uh, uh, challenges of the coronavirus and the hit to the economy. One thing, so in the first presentation, emphasized the importance of production. That you have production first, and consumption follows production. Consumption is a consequence of production. It's sort of Say's law. Uh, um, um, Production supply creates its own demand. A paraphrase to him, apparently by James Mill, who's John Stuart Mill's father. But this is a counter to the Keynesian idea that you've got to that consumption comes first. You've got to have government spending to boost consumption, and that'll lead to more demand to produce more things. So this is a monetary policy related thing, but also fiscal policy with a look at the economy. So I talked about that the first time, but it's important to emphasize that, though production is key, not just any production, right? Someone could spend a huge amount producing steam-powered tricycles. Those aren't going to sell. The demand is small. So it's not just any production. Production's got to be coordinated by the economy, by entrepreneurs, enterprises, trying to find what consumers want. So there's an ongoing searching process to produce those things that consumers want, and the whole economy is, price coordinated system for producing goods and services for consumers. But distribution, of course, is key to this, and marketing is key to this. There's a process of finding those items that people want or would likely want. Currently, it's apparently toilet paper because people have been buying more than they usually do. Production's limited. But in any case, production is key, not consumption, to the economy. And the distribution process or the marketing process is part of the a coordination issue that entrepreneurs are looking for what consumers want. So consumers lead the economy in a sense that it's what they want that the economy tries to provide, or producers, companies try to provide, but it's the consumption. The production is key for consumption. So if I haven't got you hopelessly confused there, I guess it's time to move on. In this, the short presentation here, I'm trying to cover some notes on some recent posts on our Economic Thinking Monetary page, a Facebook page. I have one on how the Federal Reserve, the Federal Reserve's huge injection of money into the economy is not just a giveaway to banks, it's to accommodate the squeeze, the dropping money supply caused by slowing velocity and so forth. So that's discussed in some Wall Street Journal articles. Another article that was in the Alt-M is on the classical gold standard. So debaters who've pushed for the classical gold standard or gold standard and run into trouble. This is more of how understanding the gold standard can help us understand what reforms go in the right direction. A look at from Alt-M on banking deregulation, like diffusing a bomb, you need to do it carefully. So sometimes monetary reform, deregulation, even if it's in the market direction, sort of blows up because it's done badly. Also an interesting post on banknotes. We have paper money. Market economists or sound money advocates are always concerned because paper money is not backed by a commodity. But another issue is germs and viruses are on banknotes in a way that they aren't on coins. And then I'll end with a discussion of Bitcoin and stablecoin, which I think is useful in terms of a case area for providing monetary alternatives. So quickly running through this, again, we have a Facebook page, Economic Thinking Monetary, and I've been sharing posts there on various things. So this is from a Wall Street Journal article about how the Federal Reserve can respond to the coronavirus panic. And then this is more on from the article from the Wall Street Journal. And this is looking at sort of an interesting discussion of the supply chain. We've got a disruption of the supply chain as China shut down for over a month. And the authors emphasize that there's a payments chain that's the reverse of the supply chain, where the payments are made for the goods and services provided by China, large economy. But these are concentrated in Asia, and trade finance to finance this process is all in US dollars. So it turns on the banks in Japan, Korea, Taiwan, China, Hong Kong having access to enough dollars to keep the supply chain going or restart it. So that's a little bit about the discussion on monetary policy related to the coronavirus panic. This is another discussion. This again, Alt-M, which is a Cato Institute website, a sound money site. This is on the classical gold standard and how understanding the gold standard as opposed to the real bills doctrine is important for monetary policy going forward. This is part of the Judy Shelton confirmation hearings, who's part of the Sound Money Project that AIER runs now. Also, this is a post on Alt-M again. This is George Selgin, and he argues, look, we need monetary policy reforms, and we've got many bad banking regulations that could be reformed, but doing that reform, dismantling these regulations, he says, is like cutting wires on a time bomb. It's risky, and it's got to be done carefully. Otherwise, the bomb blows up. So, that's a argument or quote used by the negative and saying your affirmative policy is dangerous, reform is important, but you're doing it the wrong way. The next part, though, of Dr. Selgin's comment is that it beats letting the thing keep ticking. So the current status quo in U.S. monetary policy, he would argue, is a time bomb. It's going to blow up. $1 trillion deficits and trying to finance that with the monetary system, that should be fixed. But how it's fixed is very important. So that's what that post is about, with more links to articles and so forth. Next is what I mentioned earlier, this article in the Telegraph on dirty banknotes are spreading the coronavirus, according to the World Health Organization. So banknotes, at the time this was written, banknotes from Asia are being impounded by the U.S. banks because they might have coronavirus. Now, of course, the epicenter of the virus is in Europe. So European currency could be part of this banknote or could be transmitting virus from person to person. It's just interesting for people running a gold standard related case that through history, gold, silver, and copper coins were not only sound money in the sense they were commodity money, but they also killed bacteria and viruses. If you read on medical systems, copper surfaces in hospitals are great. Every time you touch it, the viruses and microbes, bacteria die. So that's an interesting health benefit of sound money, gold, silver, copper coins. Someone pointed out the Apple Pay card is titanium, and I don't know enough about the germ properties for germs with titanium. Okay, a big part of monetary reform that's popular is Bitcoin, cryptocurrency, discussion of Libra and other Ethereum, other cryptocurrencies as an alternative to paper money. And again, you could say that cryptocurrencies aren't ideal, but neither is paper money. The US dollar has been relatively sound over the last couple decades, but we've got a huge increase in the dollars in circulation, yen, euros, and so are we headed toward a sort of a inflated asset bubble by central banks creating so much money that's not tied to any clear commodity? So that's an argument critics would make. That's one of the things that makes Bitcoin and other cryptocurrencies attractive, is that there's limited supply of each due to their algorithms. However, there's lots of problems with Bitcoin and others. One of the biggest is volatility, and others it's not backed by a commodity, something of value the way that gold and silver or other asset-backed coins are. Anyway, this is an article in Forbes about a company called Coinbase, and Coinbase is designed to be a bank for cryptocurrencies, to make it safe, to keep out terrorists and drug money, and to provide the services that would make cryptocurrencies more reliable for business and for a store of value. So that's what this article is about, and it's an interesting background. And there's plenty of concerns about cryptocurrency. There's efforts by the EU and US government to regulate it, to stop it, to ban it, and so forth. But though there are many problems in the status quo with cryptocurrency, the argument is that it's a work in process. And it's moving towards solving the problems, as this article says. Coinbase is solving the weaknesses and the problems that are inherent in the cryptocurrency world. For more on cryptocurrencies, you can read mainstream and pro-market articles, American Enterprise Institute, Heritage, Cato, which has Altam, the American Institute for Economic Research. These are all pro-market organizations, so they're not covering the wide gambit of all ideological views of cryptocurrencies. But these should give you a good view of the strengths and some of the weaknesses and challenges in the cryptocurrency world. And in the PDF of this that should be available, you can click on these links, or of course you can find them yourself. So discussion more of cryptocurrencies. Again, cryptocurrency stablecoins are a work in process. One of the big challenges with cryptocurrencies as a store of value or as a medium of exchange or a unit of account is they don't work as well as dollars or euros or yen now because they're so volatile. Bitcoin has gone down dramatically in value just in the last week or two. They go up, they go down. It makes it hard to do business with Bitcoin. And there's separate problems about how slow the transactions are for various reasons. So how do you fix this problem, or how do you address the problem with cryptocurrencies? Well, stablecoins are a technology to minimize volatility. You can read about stablecoins on Wikipedia. They're a kind of cryptocurrency that is backed by other cryptocurrencies. So, but in such a way that the value remains stable. So, sort of a market basket of things. So, there's a stable coins backed by gold, backed by dollars, and each of these are designed to have the benefits of cryptocurrencies, but also the benefits of more traditional currency in not going up and down in value a lot. So lots of different competitors in this field. Celo is one example of a stable coin. A friend of mine works for this company, and that's why I know a little bit about it. But you can read about it, and as others as well. And Celo especially is being developed for the developing world. So there's 1 billion people in the world that don't have access to banking, that can't open banking accounts, that can't, and they're in countries where the currency is often vastly unstable, Venezuela, Zimbabwe, where they've had hyperinflation. All around the world, poor people, one, can't get into banks because of banking regulations and restrictions, and their money can be, like in India, the value of the money was wiped out, right? As the federal government wanted everyone to turn in their money and get a new money. This was a way to go after the informal economy, but rich people were able to accommodate that, but poor people lost a lot of time, lost a lot of their assets. So cryptocurrencies aren't ideal, but neither is paper money, because it's at the it can be distorted by the powers in charge, whether the Federal Reserve in the US or the central bank in Europe, or corrupt in the developing world. There's on the Celo website, there's a video about the benefits of their currency. You can read more about it. They have different kinds, different ways to try and stabilize the value of Celo, and you can again read about it, read how it's funded, read what its goal is. But it's sort of in a sense, for all the money we spend on foreign aid, if people in poor countries had a stable and reliable currency that they could easily buy and sell things with their phone and so forth, that would benefit them far more than handouts or other sorts of things. Okay. The big player in the stablecoin world is Facebook's Libra, and the idea here is you've got a a coin that's not a cryptocurrency just on algorithms, but it's got real assets behind it. Facebook, Libra's plan is to buy stocks, bonds, other assets so that the Libra that is a cryptocurrency that can be used by people, anybody uses Facebook, is also backed by actual assets. It's not just made up. So this article, American Institute for Economic Research by Jeffrey Tucker, he says the greatest single contribution of Bitcoin and cryptocurrency generally, it's taught the world that money can be is subject to market-based innovation. It can be more than what we know. That is that we take money for granted. Paper currency in some ways is considered an innovation on gold and silver, easier to carry around, but it has the problem that whoever runs a printing press can print up a lot of it. So what if we could have a currency that was, on our phones, we could move around, couldn't be disrupted or inflated by governments, and had more wider uses as, again, a medium of exchange, store of value, unit of account. So that's what we're trying to get to. Bitcoin may not be it, but it may be a step in the process, and Libra is another kind of version of cryptocurrency that has the stablecoin benefits of not being volatile. And of course, Congress, the EU, and everyone wants to regulate it, limit it, and so forth. And that's part of the research, what regulations proposed are reasonable, which are arbitrary. So here's another article. This is in Investors Business Daily. Cryptocurrency could be the next social networking king, and it's an argument about in favor of innovation in social network currency. Okay, thank you very much for listening.